Hi everyone, let's look at the low time frame bearish and bullish scenarios, including potential trading setups, and starting with actually this support resistance that I wanted to show. So we used to have some resistance over here and now price moved to the downside, finding support at this same area. Now let's then move to the scenarios that I have, starting with the more bearish scenario, where if I switch to the 1 hour time frame, you can see a little bit of what I'm looking for is basically an impulsive 1-2-1-2 for then much lower prices to come. So in this scenario, we have this being a wave 1, wave 2, another 1-2, and then eventually we want to see a big impulsive move with volume increasing as well to the downside. Now in this particular scenario, if this is a yellow 1-2, this yellow wave 2 retraced to the 886, which is a very deep retracement and also a rare retracement for a wave 2. But nonetheless, it is a target. It's rare, but it is a target. And then in this wave 3 to the downside, if this is going to be such an impulsive move, you definitely want to see at least a 1.618 hit before you get a reversal to the upside. So basically what this means is that for me in this scenario, if this is then another 1-2 in white, I don't want this move over here to be the wave 3 in white, 4 in white, and then 5 in white, and this then being the end of the yellow wave 3. I want to see the wave 3 actually go lower below the 1.618. So instead, I'm looking for this then to be a wave 1, 2, maybe a 3, 4, and then a wave 5. So at least one more move down before going up to the upside. Because if price now would move to the upside, then the other scenario, the more bullish scenario, becomes more likely. So yeah, definitely looking for a little bit more downside. And if this is a wave 3, usually a wave 3, the 1.618 is the minimum target, but it can extend a lot lower. But as you can see, the 1.618 over here at about 28.2k also has confluence with my target box that I have at this same level, which is between 28.2k and 27.8k. So it is an interesting area of confluence as well. But as you know, right now we are finding a little bit of support at the support resistance flip. Now if you then go to the WXY scenario, which is the more bullish scenario, I'm looking at this to be a 3-wave in the W, then a 3-wave zigzag over here in wave X, and now looking for a 3-wave structure in wave Y. And if I actually go to the 30-minute time frame, it's a little bit messy, this scenario. As you can see, I've been working on it. But what we're looking over here for is inside this white wave Y, and then a WX, and then eventually a wave Y to the downside, is a zigzag structure in this wave Y. So eventually ending. So we then have this as a 5-wave move as a first structure in wave Y. Then we're looking at a 3-wave correction and then another 5-wave move to the downside. Now over here in white, you can see the line that I pulled yesterday, but let me remove it now for clarity's sake. And then if this is then the low of this wave 5, so we then have 1, 2, 3, 4, and then eventually wave 5 over here, which is definitely possible. Volume is decreasing. We made a lower low, as you can see, volume decreasing. If this is a wave 3, this is what you want to see for potentially the end of a wave 5 as well, where the volume in wave 5 is lower than the volume in a wave 3. Also, the target area over here, the 1.618 and the 1.236, is the most common target area for a wave 5, pulled from the low of this 3 to the high of this 4 then. So as you can see, so far it's been very nicely respected, as well as the 0.618, which is another wave 5 target. So yeah, this could be a 1, 2, 3, 4, 5 in this particular scenario, with 5 ending here. And then eventually we're now looking for a 3-wave move to the upside, which can have many different structures in a wave B. The minimum target for a wave B usually is a 0.382 sitting at 29.3k. But personally, if this is the temporary low and we would move to the upside, I would like to see this order block being hit, as well as confluence with the 786, which is basically between 30k and 30.1k. And the reason for that is that if price is going to move above this high, there is not much resistance in this area. It's basically like blank because of the massive decrease and the quick move to the downside that we had. So if price can move to the upside and enter this area, it can also move up relatively quickly to the order block that we have over here. So that is definitely an area that I'm looking for. And another thing that is also nice and quite interesting is that if price is going to move to the 786, we can already look a little bit in the future. If this is then a wave A in this bigger wave Y, right? If this is a wave A, the first 5-wave structure, we then get a corrective wave B, and then eventually we get a wave C. Now this wave C should be around the same length as this wave A. And if I then pull a Fibonacci trend-based sub-extension from the high of A to the low we made at the moment to then the potential high of wave B, you get this target box over here. And this is then the target box for eventually wave Y, as well as then this ABC to end this WXY. And as you can see, this one has a nice amount of confluence as well, with the target box I mentioned earlier at around 28k. So that is definitely very interesting. And then the fib times that you see on the chart is the time that it took to develop wave W compared to the time it can potentially take for wave Y to form, where the 1-to-1, meaning the exact length of W being the exact same for Y, is currently sitting at about, well, it's Saturday the 22nd of April at 8:30 a.m. in the morning. So let's see what price does. Now the potential trading setup over here, there's a bit more risky and a safer option if this is indeed the end of the wave 5, then in this being a 3, 4, 5, where the volume is indeed lower, hitting the target area for a wave 5, finding support, also actually swing failure patterning the low. We made a low over here, price moved up, down, took the low once more, which is actually quite nice. You want to see that sometimes. So that's interesting. The more risky option is of course trading, entering where price is now, for example, and then eventually stop loss below, trading it to the upside where my main target would be around the 30k area, right? The more safer option is to wait for a little bit of a proof, let's say, to the upside, where you can see and count a couple of waves to the upside. And when price is moving down, it would be very nice if you can also see some bullish divergences on the CVD chart between the low that has been made and then the higher low that has been made. So on the CVD, you then want to see this low and then a higher low, but you want to see a lower low on the CVD. That's eventually the goal for then a little bit of a safer setup, where the stop loss will also then be below this low as well, and the main target will be exactly the same. Now of course this is educational, guys, based on how you could potentially trade Elliott Waves with the more risky and a more safer option. But again, this is based on Elliott Waves and educational, how one could potentially trade this move. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.